Everything here, just. He still looks at nature, where I'm always looking.
Good evening, ladies and gentlemen. Can you hear me? It's 8 o'clock.
We can hear you, sir.
Thank you very much. Welcome.
We can hear you loud and clear.
All right, please. It's 8 o'clock, and as usual, we'd like to start on time because we have 2 hours of Taiwo's time. And I'd like to go through some housekeeping first. Let's all try to mute ourselves while he's making his presentations. There have been so many questions, and up till 6:30 this evening, we were still sending questions to Taiwo. And those who have not sent in their questions but have questions should please just type out the questions on the Zoom. We have people here who can capture them, and once Taiwo is finished with his presentation, minding all the questions that he has, we will have some time to attend to other questions. Mine is to welcome you because we want to maximize the time and not talk too much about any other thing that we may have here. We have the honor of bringing in Mr. Taiwo Oyedele, who is currently chairman of the Presidential Committee on Fiscal Policy and Tax Reforms, set up by President Bola Ahmed Tinubu with a broad mandate to carry out critical reforms bordering on fiscal governance, revenue transformation, and economic growth facilitation. Prior to his current role, Taiwo was the fiscal policy partner and Africa tax leader at PwC, where he worked for 22 years, gaining in-depth knowledge and diverse experience, ranging from tax advisory, policy advocacy, consulting, leadership development, and policy design and execution. He has also served as thematic lead for the Fiscal Policy and Planning Commission and chairman of the West Africa Debt Management Roundtable of the Nigerian Economic Summit Group. I mean, Taiwo has done many things. He's a fellow of the Nigeria Leadership Initiative, member of the Global Tax Forum, and a former member of the Global Governing Council of the Association of Chartered Certified Accountants, ACCA. He's also an associate professor at the Babcock University and a guest lecturer at the Lagos Business School. He's an alumnus of the London School of Economics and Political Science, Yale University, and Harvard Kennedy School Executive Education. He is the founder and president of Impact Africa Foundation. I'd like to welcome you to the platform Taiwo. A little about the background. I just started receiving calls. I don't work for government, work for myself. And people are asking me so many questions about this tax reform. Some panicking, some worried, but a lot of misunderstanding. And I said to myself, given my own understanding of the reform, this is one of the biggest reform ever undertaken in my country, in my lifetime. And I thought that, you know what, let's bring Taiwo to come and talk to as many people as care to listen to him. So we are starting on the platform now with 240 odd people, and some sharing platforms. So it's a large gathering, but the platform has the capacity to take up to 1,000. And this particular broadcast is live on YouTube as well, just in case we reach capacity. Without further ado, Taiwo, the platform is yours.
Good evening, sir, and good evening to everyone who has joined. I'd like to appreciate you, sir, for this opportunity to have this engagement. I think it's very, very refreshing to see an approach to governance and policy that says, let's have a conversation. So we're very grateful, and we're also very excited with the level of interest. The number of questions, in fact, up to this like 2 minutes ago, I was still trying to compile many of the questions. So apologies if your question does not make it to the list I have on the slides. Once we're able to go through the slides and take the questions we have, we'll take more before it's 10 p.m. So I'll just get on with it immediately.
Yes.
Yes. So what I want to do is to create some, context and background for the reforms by going through this outline, which is essentially starting with the context for the reforms and then moving on to the core principles and objectives of the various changes in the law. I will then highlight some of the contentious issues and common myths, because there has been very, very high level of misinformation about the reform. And then I'll share my closing thoughts and then deal with some of the questions that have been sent previously. So the economy, and this is not an economic, lecture, but the Nigerian economy was in serious decline as at, middle of May 2023, as of May 29. And that's, indicated by the various measurements that you want to look at from the macro point of view, whether it's external position, where our net external reserve was under 4 billion with over 7 billion on met forward contracts. Some of us couldn't even buy, pay for subscription of $20 on our Naira cards anymore. The government was not generating enough revenue, less than 10% of GDP. So they resorted into printing money to spend, because they were spending 97% of revenue just to service debts. So to even pay civil servants, they printed the money to spend. Over 22 trillion accumulated interest, altogether over 30 trillion was printed. This is part of the inflationary problem we have been dealing with in the past couple of years, beyond subsidy removal and Naira flotation. I won't go through all of it, but the message here is really that the economy was such in a bad shape. Without these hard but necessary reforms, it would have been a very different story today of a total economic collapse. So what I did here is to try and compare using traffic light colors. Nigeria was amber, May 2023, was about to turn red, but because of the reforms, we've seen them turning green. And then the challenge for policymakers and our politicians is to translate that macro result we're seeing quickly to micro outcomes for households, so people can even just, feed their family and do basic things. So the next thing is to narrow down to the tax reform. Also, within context, what are we really trying to do? They say if it's not broken, don't try and fix it. So there has to be some problems with the system that we're trying to address. So major problem is the tax system was not fit for purpose. Many of the tax laws we inherited from our colonial masters before our independence, before many of us, at least people of my age group, before we're born. And because of that not fit for purpose tax system, it became a hurdle impediment to growth. We're taxing capital, we're taxing investment, we're taxing poverty. And that's why when my committee was being set up, Mr. President said, we'll no longer tax seed. We'll wait, invest with you, and share in the fruits. And that's very instructive because it's a philosophy of how the system should work. So the reform objectives are to achieve fairness and equity, ensure there's harmonization of taxes, improve the efficiency of revenue administration, promote the ease of doing business, and ensure there's transparency and accountability for taxpayers' money to drive overall economic development that is inclusive. So far, we've made some progress, and this is not just the tax reform, but the reforms generally, gaining macroeconomic stability, beginning to see growth in the region of 4%. That is going to get better. We're seeing rising investor confidence, whether you're looking at PMI, Purchasing Manager Index, whether you're looking at gross capital formation, whether you're looking at the interest in the capital market, whether it's Eurobond, you see that rising interest. Of course, it started with the FPI. And now we can't wait to see the FDIs coming in to replace even the FPI that is quite expensive. But overall, there has been progress. But this is still work in progress, and we are mindful of that because we're not there yet. And so these reforms need to be sustained. Something as significant as this tax reform, with the level of misinformation that we have around, is exposed to very high political risk. Because at the end of the day, we have to acknowledge that, politicians are politicians. Even if you have the best reform and it turns to be very unpopular, you just say, you know what, we are suspending it. And that would be really, really very unfortunate. We hope that it does not happen. So which is why we also have intensified our engagement to explain to people using facts and data. We're not politicians. We're not trying to promote any politicians. We're just Nigerians who came together with an assignment to help their country. So you will see the building blocks to the right of the screen of what we are trying to piece together. And on top of it is how do you strengthen the social contract? So on this list, you will see the number of taxes on this slide. And I did this intentionally to say I must fit this into one slide. It was hard. These are the approved list of taxes and levies collectible by the federal government, column 1, state government, the one in the middle, and local government, the one to the right. This was enacted first in 1998. The list got even more unwieldy. They added more to it in 2015, and they kept adding more to it every single year since then. So just imagine over 60 different taxes and levies that we ask businesses and individuals to pay. Yet we can't even raise enough money from taxes. So something has to be wrong with our current system of taxation that is not sustainable. Many countries that do far more than us, even smaller countries collecting more than our tax revenue, they have less than 10 taxes. So the solution to our problem cannot be to keep adding new taxes. They say insanity is doing the same thing and expecting a different outcome. So we then need to take a step back and say, how do we even just reform and reset? And the answer to that is, these taxes are just too many. The burden on businesses and individuals too high. So harmonize the taxes, repeal the ones that are useless. We call them nuisance taxes. And then whatever few taxes you have left, create exemption for low-income earners, exemption for small businesses, lower taxes for middle class, lower taxes for all businesses, including the large one, and high net worth individuals to pay a little bit more. So that way you have a progressive taxation system that is ideal for a modern society. So I'll quickly speak to some of the policy objectives and principles behind the reforms. One second, let me grab my water. So the first one is fiscal equity. So what are we trying to do with fiscal equity? So what
If anybody is unmuted by default, please mute yourself. And if we find the same person unmuted, every time we'll just send the person out of the platform. Please check your system and mute yourselves, please. Thank you. Go on, Taiwo.
Thank you very much, sir. So we can have less distraction. So the fiscal equity on one hand is even between government, federal government, state and local government. You find that level of even distrust where, for example, revenue that belongs to the state, the federal government enacted Finance Act, renamed it from stamp duties that Section 163 says belongs to state alone, and they call it electronic money transfer levy, and they started sharing it federal, state, local government, and then the state went to court. So federal government will issue their own bond, is tax-free, and states will issue their own bond and is taxable. All those, unfair treatments have been corrected. We also have the inequity about how taxpayers are treated. You see our lowest income earners are the one paying the most income tax. When the tax amnesty we call VADES was launched in 2017 by the acting president, that was the vice president at the time, Professor Yemi Osibajo. The data was that 96% of income tax of revenue of the government was coming from low income earners. So clearly that cannot be right. In a country where you're taxing the poverty, there's already an income inequality. And then you add tax burden into it as well. It just creates more social problem for us. So, and then to create a level playing field, we see people who operate in the free trade zone, which was set up in the 90s for the purpose of competing internationally, export to the rest of the world, you get tax-free. And then before we knew it, there were companies in the free zone that were just selling exclusively to the domestic market. Now they're not paying corporate taxes, and the companies operating in the domestic market are paying taxes. How do they even survive? They can't even compete. And so those issues needed to be addressed. The next one is economic growth. The best way and the most sustainable way for government to have robust fiscal space is to allow the economy to thrive. When businesses do well, they pay taxes. When individuals and households do well, they pay income taxes. They consume and they pay VAT. So it's just like logical for government to prioritize how do we facilitate economic growth rather than all these our fixation on go and look for taxes. They say it's informal sector. We are chasing people up and down. We even use crude method to collect these taxes, and we're better than that as a people. So this was a reform to reset not just the taxes we collect, but also how we collect those taxes. So one of the things, two important things that we're doing out of so many from this reform is number one, from next year, January, low-income earners, about 1/3 of all workers in the private and public sector will be completely exempted from paying personal income tax. So PAYE will no longer be deducted from their salaries. They have more disposable income. The same thing will happen to middle class, middle income earners. They will see a drop. So it won't be total, exemption from tax. It will be a drop in their personal income taxes. So again, their disposable income would also go up. And this is numbers going to around 2 million naira salary a month. Above that level, there'll be incremental amounts. So if somebody earns 3 million naira a month, they might see an increase of 50,000 in their pay. But before you get to the top rate is 25%. But there's what we call effective tax rates. So the top rate says above 50 million, apply 25%. But it doesn't mean that if you earn 60 million a year, that you pay 25%. You pay less than 25%. Before you get to effective rate of 25%, you must be earning close to 240 million naira a year. That's about 20 million naira a month. So this is not even by the standard of high net worth individual at the top, this is still a very attractive reform. Plus, the people who earn those kind of money, 250 million, 300 million, 1 billion naira a year, are mostly either top executives or business owners. So what this reform has also done is to significantly lower the cost of doing business. One of it is from January next year, businesses in Nigeria will be able to claim input VAT credit on their assets. So if you build a factory, you set up a factory, you are doing your services, you bought laptop, you bought vehicles, you bought mobile phones, all the VAT on your assets from January next year, you'll be able to claim credit for the VAT you pay on assets and even on services and overhead. You pay for software, you pay for consulting, technical services, all those things, you get the VAT back. This is significant. The estimation for, based on 2024 tax collection, is 3.4 trillion naira equivalent being given back to businesses from just VAT alone. There's also the plan to reduce the corporate tax rate from 30% to 25%. This is worth 1.4 trillion naira based on the collection for 2024, also going to businesses. So what's going to happen is those top earners, as they pay a little bit more in personal income taxes, let's say 10 million naira more for the top earners, they'll find their company is gaining 100 million naira. So overall, everybody, even the high net worth individuals, will benefit from this reform. There's also an intentionality to promote formalization. We have very huge informal sector, and the tax system is one of the impediments to people who want to formalize. If you do your business as an enterprise or no name at all, and you are the person that says, I want to pay all the taxes, I want to do the right thing, you don't get past 19% in your effective tax rate on your income, on your profits. If you set up that same business as a company, suddenly that goes to over 40% effective tax rates. And that doesn't make sense. What you find in many countries is that the top rate, the marginal rate for individuals, which is also applicable to informal sector, is usually higher than the rate for businesses, so that people have that incentive to try and formalize their businesses. And formalization is not about collecting, taxes. It's about the ability to be more organized and to be ready for growth, scale, and investment. Because you then have some discipline you have to do, the directors, minutes of meeting, file returns, prepare financial statement, and that level of discipline just changes everything for you. So what we've done now is we are reducing the corporate tax rate, and the marginal rate for individuals is going to 25%. So at least to reduce the disincentive to formalization. Of course, there's competitiveness. We want to be the location where people want to come to for their head office location, headquarters, business, shared services center, all those stuff that can bring more development and investment to us. But we are currently not competitive based on our existing tax laws. So the new tax law will fix that problem. For example, the new tax law is introducing what we call unilateral tax relief. In other words, Nigeria does not have a double tax avoidance treaty with all the countries in the world. We have very limited ones, less than 20 countries. So that creates a disadvantage. If you set up in Nigeria and you're doing business in many countries and there's no DTA, you end up paying double taxes, double taxation. So what we have now done is to say nothing stops Nigeria on its own from giving you tax relief for any double tax. So we have introduced now unilateral tax relief. What this means is that is the equivalent of Nigeria having double tax avoidance treaty with all the countries of the world, should you want to operate your business out of Nigeria. We've dealt with issues that were major problems for banks when they were doing holdco, some years back. excess dividend tax here and so on. Those issues have now been dealt with permanently. Our rates are now more competitive, and we also have removed, so there is this minimum tax that we ask companies to pay in Nigeria on their turnover and capital. A company has made a loss or very little profit, you say you are sorry, but you still have to pay tax. They then have to go into their capital or have to borrow to pay government taxes. That's almost like somebody who needs blood, and you say, can you, spare me a little bit more? Is the fastest way to kill a company. There's tax harmonization, which I've spoken to, but it goes beyond just the number of taxes and the number of agencies collecting those taxes. It extends to things like tax audits. Many people on the call will be familiar with government will come and say there's desk review, there's monitoring. They'll come back and say there's audit. They'll come back and say there's special audit. Then they say there's investigation. You're almost like constantly audited. You don't even have the time to focus on your business. And it is the few people that they see in the tax net that they keep auditing. So that problem has to go. So we're also harmonizing how audits are done, including government going forward using intelligence for tax audit. Don't just chase everybody and write them to do an audit. If somebody forges receipts because they want to claim a tax deduction, under the new system, the system will flag it because it means that you said you bought something and there was no seller for it. Because every transaction is supposed to match the buyer and the seller. If you buy an item for 10 million and you overstate it as 15 million, the system will also flag it because the two numbers are not adding up between the seller and the buyer. If you sell an item and you're hiding it from the government and you don't report the income, the person who bought from you wants to claim a deduction. So they'll report the expense and the system would also flag it. All this level of intelligence is what will help us to move from our just throwing stuff in the dark, into a more deliberate, risk-based tax audit system. And that system also has a way of rewarding those who are doing the right thing. And for those who are doing the wrong thing are the ones that will face more audits. Of course, there's nothing you do today that you don't need to think about modernization. Whether it's just even doing buying and selling, doing restaurants, people talk about AI. All of that are things we're also trying to bring on board to enhance our efficiency under the new system. There will be a lot of self-service. You don't need to go to the tax office to file returns, to look for tax clearance certificates. Many of the annoying things we have in our laws that were just creating administrative, hurdle for the people have been removed. For example, we have this thing we call CAFA, Certificate of Acceptance for Fixed Asset. When you buy an asset, you need government to certify the asset. They'll come and inspect it. You have to pay their flight, accommodation, all manner of stuff. And they'll tell you, okay, indeed, the asset you bought is 100 million naira. So you can just claim capital allowances. Under the new law, there's no need for that anymore because we now have credible. The law was introduced in the 70s. In the 70s, we didn't have a lot of the modernization we have today. You have to physically go and verify the asset, ask custom how much is it that they paid when they imported it. The world has moved on beyond that. We can't be stuck in the past. As part of this new system as well, it empowers you as a taxpayer to ask for rulings from the tax authority and for them to respond to you within a short period of time. If they fail to respond, your position is automatically adopted. So it now places the burden on the taxman to ensure that when you need clarification, they provide it, even if they have to charge you a fee for it, because somebody can also just start writing the taxman on everything. But the important message here is that the law recognizes the need for certainty and predictability in the tax system. Of course, there's also a lot of provisions to increase level of transparency, governance, and accountability for the taxes that we pay. And finally, on this is sustainable revenue. At the end of the day, if government can't earn revenue to run government, all of us, we have to face the consequences. And the way we normally face the consequences is government just prints money to spend. When they print money to spend, the value of the money you have in your hand, your wallet, and your bank account falls. If you had 10 naira before, and you could buy things worth 10 naira. You suddenly could only buy things worth 8 naira. You've lost 20% of it. That's the equivalent of a 20% tax. Unfortunately, this way of taxation increases inequality and punishes the low income earners and vulnerable even more. Why? Because they don't have dollar savings and investments. They don't have real estate to protect them from inflation. And as they suffer the tax even more, it increases this social gap, widens the inequality, social discontent, and if you don't address it, can easily bring down a society. So the next thing is, I won't go through all of these. So there are specific changes we are doing to VAT, that we are doing to personal income tax, the one to companies income tax, capital gains tax, what we are doing to curb evasion, tax evasion, what we're doing to moderate tax avoidance. So the technical people will tell you that evasion is a crime because that's you're lying about your tax affairs. But avoidance is you just being smart. You're moving things around, planning stuff so you don't have to pay tax or you pay very little. So while avoidance is not a crime, it's also important that it's moderated. Otherwise, you get to a point where government is out of pocket. For the first time, we created the Office of the Tax Ombud, and the Ombud is our way of trying to protect more than 80% of our taxpayers who currently are left out in the cold. So just imagine the small businessman, the small businesswoman, the young person who is trying to just hustle and earn a living. And then, regulators, tax authority officers show up and they say, you're owing 2 million naira, 4 million naira, 5 million naira withholding tax, VAT, PAYE. You don't even know what is withholding tax. Now, what do? You don't understand what the law says. You don't have the resources to hire a lawyer, an accountant, or tax practitioner. You end up just negotiating. Oga, can you help me? Oga gives you one account to pay a bribe, another one to pay small to the government. They allow you rest for 6 months to 1 year, move your file to another person, they show up again. Just leaving you out there, out in the cold to be exploited every time. So the tax ombud is now your tax friend. The ombud has been empowered to, in fact, override issues affecting the tax system as to do with procedures and processes. If somebody says they want to close down your business within 48 hours if you don't pay, that provision is not in the law. The ombud can take care of that. And even the ombud can institute a legal action on your behalf. Because you don't have the money to go to court, you don't know how to do it, the ombud can come to your aid. And everything that the ombud does is free of charge because this ombud is funded by government allocation as provided for in the new law. But of course, this does not mean that you should do anything you like, evade taxes and don't disclose your affairs, and then the ombud will be there to protect you. No, this is you wanting to do the right thing, and there's help all the way for you. There's the tax agent. Some people who are tax practitioners will know that the system is not working as it should. There are taxpayers who are very corrupt. There are tax officers who are extremely corrupt. And there are also tax agents facilitating the corruption between the two of them. Of course, that's not to say we can't paint everybody with the same brush. There are very many honest taxpayers, as there are so many very honest tax officers and tax agents. But we need to make sure that the system itself is no longer an exception to do the right thing. Because sometimes in Nigeria, it's almost like you are the exception. If you join the queue, you go through the process, you don't pay a bribe to do your passport and driver license. Those things that most of us do are meant to be the exception, not the norm. So what we are trying to do now is reconfigure the tax system so that doing the right thing becomes the norm and doing the wrong thing becomes the exception. Part of that is making sure that tax agents are accredited. They must be technically competent. You can't give what you don't have. If you can't even file your personal returns, how do you file for me as your client? You must be ethical. You don't cook up the books. And then you must have a commitment to self-compliance yourself. If you want to help others comply, demonstrate by you also complying. We have this withholding tax regulation that we introduced in 2024. It actually took effect January 1st, 2025. So this has been around now for like 12 months, where we reduced the withholding tax rate on very many businesses, eliminated it on many businesses like manufacturers, like agri businesses, like small businesses. And what was the thinking behind this? Nigeria has this very high interest rate regime. You want to borrow from the bank and it's 30%, it's 35%, and then you send an invoice for your services or supply of goods, and then they keep 10% of your money. Your money is 10 million. They pay you 9 million and pay 1 million to the government as advance tax. But that's money you could be using to develop your business, use to reinvest, to finance your working capital. It's your money being tied down at 35% interest rate that you are paying. So we thought if you just free up the cash flow for businesses, given the high interest rate environment, that in itself will have a multiplier effect on the ability of businesses to create wealth. Now, we have incentives in Nigeria. Some people struggle to reconcile how is it that we said we want to reduce taxes, eliminate many of them, and then we said we will not increase taxes, we will not introduce new ones, but yet we said we will collect more revenue. So people struggle to reconcile that because it doesn't seem to be adding up. But this is the secret. Nigeria has this wide tax evasion. We call it tax gap. People are evading taxes. Some people are evading their taxes. And if you allow that to persist, what happens is the honest person who is trying to pay their taxes is disadvantaged. That means we are rewarding bad behavior and punishing good behavior. By addressing issues of evasion, you solve not only the revenue problem, but the distortionary effect of tax evasion is solved. The second one is what I have on the screen. Nigeria has all manners of wasteful incentives. Not only are many of these incentives wasteful, they also create distortion because if you are connected to the State House, somebody in Ministry of Finance, you get the waiver that other people don't get. And there's a lot of discretionary power on the part of regulators and the officers to process and approve these incentives. So what we've done is to get rid of those very many incentives that we consider to be suboptimal or counterproductive. One of it includes pioneer status. Pioneer status was well intended, but the way it was being implemented was very open to abuse. So if anybody has pioneer status up until 31st December 2025, they will run the life of that pioneer status, whatever is left of it. But from January next year, nobody will get a new pioneer status. The new incentive now is economic development incentive for priority sectors. So these priority sectors are listed on the screen, from agri to energy to mining to health, creative sector, and so on and so forth. And the subsectors that are eligible are clearly outlined in the law. That's what I've summarized on this slide. The level of investment you need to be eligible is clearly stated. And the sunset, which means from 1st of January 2026, how long will this incentive be available to eligible investors? We don't want to wake up in 50 years' time and realize there was one incentive that is now very wasteful. We used to have one incentive in our tax law. It was called reconstruction incentive. It was introduced after the Civil War. And then people left it there, forgot it was there. There was one they did for the oil and gas sector when the price of crude oil per barrel was $20. In fact, it wasn't even up to $20. So they gave all manners of incentive and credit to ensure that, there's investment in the oil and gas sector. And then as the price of crude oil per barrel was going up to even over $100 per barrel, we did nothing. It turns out Nigeria lost over $10 billion in the incentive that was not intended. But because nobody was looking at the law, we lost those kind of resources. So we thought this time around, let's have a sunset provision. If we did nothing, this incentive lifespan will come to an end as indicated. If everybody believes that this incentive must still continue for this XYZ sector, then we have to do something about it. So this time around, it's an active approval rather than a passive approval process. So these reforms are expected to help all of us, from businesses, large and small, medium size, everybody would benefit. Lower tax rates, provision of tax rulings, statutes of limitation, which means taxman cannot just come and open your audit and say, I want to audit you for the past 15 years, when they know you can't find the records. And that creates a risk for you and your business as well. So things like reorganization, tax exemption, businesses are now allowed to do more research and development that will be tax deductible. You can give more donation now, including in kind and capital, and get more deduction for those donations. Household will find more reliefs. Individuals, things to do with their income, things to do with transport subsidy, as well as opportunities. So one of the things we also focus on in the new tax law is it's not enough to just reduce my tax burden. Can you create opportunities for me? If you think about the business process outsourcing space, it's a hundreds of billions of dollars, economic space where Nigeria is not really very active. And that's because mainly, apart from the infrastructural challenges, where you need to have reliable electricity and internet, the bigger problem actually wasn't even the infrastructure, it was tax. Because the tax system says, if you hire a Nigerian in Nigeria to work for you remotely, the employer, wherever you may be, becomes liable to tax in Nigeria. So people will say, why do I have to insist on hiring Nigerians when I can hire Kenyans, South Africans, Indians, Filipinos, and I won't have this problem? So they went to those other places and didn't look in our direction. So this new tax law has fixed that problem. So I've been saying to young people, this is the time for them to get some training, first by looking at what are the skills that they want for these remote work. What are the skills? Where can I get the learning? A lot of online free learning is available. Then what platform can I join where they recruit people for this online work, right? And then just imagine 1 million young Nigerians getting $2,000 a month, $3,000 a month. That's a lot of money to help them and their family. But even more so, it's a lot of inflow of FX to help us strengthen and stabilize the Naira. Government, of course, will benefit when businesses do well, households do well, individuals, prosper. Government will indeed also benefit in many ways than one. So, but we see there are challenges, there are risks, we have our mitigation strategy, but the most concerning is the low level of tax awareness. So many of the things that we have been talking about this new tax law are not even new. Like using a tax identification number for your bank account was introduced in 2020. It's been around for 5 years. What happens is we took the decision that we will repeal all our old laws because they're just too old and we'll enact new ones. But that doesn't mean that every single provision of every single old law was bad. There were things that were still very useful. We transferred them from the old laws to the new ones. But because this reform has created this national awareness, which is positive actually, that people are talking about taxes is a good thing for our economy. But then they are interpreting it to mean every single thing they heard about this reform must be newly introduced, which is not the case. So that low level of tax awareness is fueling this concern and then nervousness about the tax reform. But maybe even the bigger one is the trust deficit, also creating level of misinformation. But I won't spend too much time on that. I think as much as possible, we'll try and help to correct the misinformation, and more people that understand the reform, the more that can help us on WhatsApp groups, on associations, clubs, religious organization and setting, wherever platform we find ourselves. I think just helping people to understand it correctly can help us move the reform forward. So here I want to quickly address some of the common myths. One is that government is introducing new taxes on the masses. That is not true. As a matter of fact, this reform is reducing the number of taxes, lowering the tax rates, and also the burden of compliance for the masses. Your bank account will be debited from 1st of January. Not true. Your bank account will not be debited. And there's a provision in the law that is called power of substitution. It's actually not new. It's been in our law since forever. So what that provision says is that everybody's supposed to do self-assessment, which means report yourself and say, this is my income, do the tax calculation, especially if you are self-employed or you own a company. You report your affairs yourself. If you don't, and government has any information about you, and that information could be that you declared, a party, you close the whole street in Ikoyi or Victoria Island, you bring in, maybe you brought in Whitney, or what do you call these people? An American artist that you are paying millions of dollars to, right? Beyonce, for example, or you bought Rolls Royce and you just dash whatever behavior that gives intelligence to the government, they will interrogate it. And that could also be information they find from your bank account. So, of course, no government will start chasing people with 1, 2, 3 million naira in their bank account because the process is not going to be worthwhile. First, you need to write to the person. We have this information about you. We can't find you in the tax in register. Do you have a tax number we are not aware of? You reply or you refuse to reply. They write again. Based on the information we have about you, we think that your tax should be 10 million naira, but you haven't paid 10 million. You have the opportunity to say, no, it's not 10 million. You object. They wait for 30 days, write again and say, we have amended it. That back and forth, all the way to court. You can now say, I want to appeal. You go to tax appeal tribunal. From there, you go to the high court. From high court, you go to court of appeal. From there, you go to the Supreme Court. This thing I'm telling you can easily take you 5 to 10 years before the government will now say, your liability has been finally established. And you have the money and you don't want to pay us. And they will now write to your bank to say, block this amount. This guy is owing us 10 million. Do not allow this guy to spend 10 million out of the money he has in your bank account. Okay? So clearly, that process, like I said, has always been there. In my entire career of more than 20 years, government did not even use it once. The only time there was an attempt to use it was when Fola, FRS, was writing to some bank to say, post no debit, post no debit. And at that point, they couldn't even take money directly. They were just using that as a way to force people to come and have a conversation with the tax authority, which I, even along with many people, disagree with the approach at the time. So under this new tax law, nobody is debiting your account. Nobody is taking any money from your account. So that's the biggest misinformation we have seen around. Small businesses will suffer more. That is not true. This reform is actually benefiting small businesses the most. The biggest beneficiaries are low-income earners, small businesses, and large businesses. States will lose revenue because it will be collected centrally. This is not correct. So this new tax law says, let's have one revenue agency per level of government. So at the federal government level and for the federation, let's have only Nigeria Revenue Service. At each state level, let's have only the Internal Revenue Service of that state. Let it not be that one state has 15 agencies collecting levies and taxes. There are states, for example, where property tax is collected by the land people and income tax is collected by the Internal Revenue Service. This is not good for us. Why don't you just harmonize everything and let the revenue man collect revenues? We hope that we get to a point where, this one that, custom will celebrate revenue collection, NUPRC will celebrate revenue collection, even NCAA that is supposed to be regulating airport is celebrating revenue collection, right? We want regulators to regulate and let the taxman collect revenue for government. So that way people will pay less, government will collect more. Because what's happening now is people are paying more and government is collecting less because a lot of it is lost in transit. The tax reform is about revenue grabbing. No, this is about resetting the system so we can stimulate growth and development. Capital gains tax will be charged on your capital market investment. This is incomplete information. So I was, traveling from Abuja to Lagos, from Lagos to Abuja about 2 weeks ago. And after we landed, a man walked quickly to me and said, sir, I see you on TV, you are the tax man. and because of you, I couldn't buy shares. I said, what are you talking about? He said he's a shareholder in Sterling Bank, and Sterling Bank was doing a right offer. Right issue, you ask existing shareholders to buy more shares at a price that is lower than the market. Technically, if you buy, you're fine. If you don't, you lose money. So he said he didn't buy. And I said, why? He said, because we have introduced 30% tax on shares. How much are you going to buy, gentleman? He said about, less than 10 million. I said, the person that told you that there's a 30% tax, did they also tell you that 150 million proceed in 1 year is exempted if your gain is not more than 10 million? And by the way, if your proceed is more than 150 million, or your gain is more than 10 million naira, all that you just need to do is to reinvest, and your capital gain is totally exempted. So what is true is that over 99% of investors in the capital market are exempted without conditions, unconditionally. The remaining less than 1%, they are exempted with condition, which means reinvest and you are exempted. When we're looking at this, we saw different countries have different conditions for this exemption in the capital market. Some will use residents versus non-residents, so we thought that discrimination is not what we need now. Other countries use, did you hold it for within 1 year? In which case you pay tax. Did you hold it for longer term? You don't need to pay tax. And what we saw was in countries where they say pay tax if you held it for only 1 year because you're like just speculating and playing the market. If you hold it for a long time, they exempt you. People were holding their shares for long term and it was drying up the activities in the market and affecting liquidity. So we also didn't think that was a good approach for us in Nigeria. So we came up with this, idea in between of reinvestment for exemption, which means, to be honest, and I don't want to sound like I'm selling you loopholes in the law, you can literally just make a lot of gains in the capital market, sell it today, reinvest tomorrow, and exit the day after. The only thing that it will cost you is the transaction cost. But even that transaction cost is stimulating activities in the market and empowering the market participants. So what we've done now is the current system in the capital market is such that you have capital gains of 10% that does not recognize a lot of your costs. You have exchange losses, it doesn't care. Even your capital losses, to the extent that one of our members of my committee is a consultant and he has a client who is foreign portfolio investor in Nigeria. They brought in millions of dollars about 12 years ago, bought some shares of some banks. They exited about 3 years ago. I think they unfortunately exited just when the market was picking up. But they had made about 50% gain in Naira terms. But in dollar terms, they had lost 1/3 of the money they brought. The capital amount they invested in Naira plus the gain was less than 2/3 of the money they brought. Despite that, they paid capital gains of over 1 billion naira, compounding the losses they had made. Under the new law, the exchange loss would have been deductible and they would not have paid any taxes at all. So even this new reform is reducing your business risk and investment risk in the capital market. The other one is they say even minimum wage earners will pay PAYE because minimum wage is 70,000. 70,000 times 12 is 840,000. In our tax law, we said 800,000 is tax exempt at 0%. It means that minimum wage earner will still pay tax on 40,000. That is not correct. What you find in the tax law is called taxable income bands. So when somebody earns 70,000 naira per month, that's not their taxable income, that's their gross income. Before you arrive at taxable income, you take gross income and you deduct what we call statutory deductions, pension contribution, National Housing Fund, National Health Insurance Scheme, mortgage interest, as well as insurance policy on your life and the life of your spouse. You deduct all of that, as many of that as you have. In addition to that, you take rent relief allowance. It is the balance after all of these that is called taxable income. You then take the 800,000 and apply 0% to it. So in other words, people that are even earning 80, 90, 100,000 naira per month, you find that their PAYE will disappear under this new law. In addition to that, there's a specific provision in the new law that says national minimum wage is exempted from tax. So as we are speaking now, if there's an announcement this evening that from tomorrow, national minimum wage is 250,000 naira a month, that 250,000 naira a month is automatically exempted from tax. Again, trying to implement the promise of not taxing poverty. Gift and remittances will be taxed. They say, oh, any gift in your account, remittance from abroad. This is not true. Gifts and remittances are not subject to tax. They say Nigerians in the diaspora will pay tax. Again, incorrect. Nigerians in the diaspora are no longer tax residents in Nigeria. The rule for residency in Nigeria is, are you here for at least 183 days in a 12-month period? If you live and work abroad, it's not likely that you spend 6 months in Nigeria in 1 year. Okay, so in which case, you have broken your tax tie with Nigeria as a resident. You are no longer a resident. So whatever income you earn abroad, you pay your taxes abroad, you send it to Nigeria, there's no tax on it. Of course, if you are a Nigerian in the diaspora and you have a business in Nigeria that you're running, you have real estate, you let it out, you are collecting rent, you have a family business, somebody is running it for you, you will pay tax on those businesses like anybody else. It's not a question of you being diaspora or not. It's a question of the investment and the business being located here physically in Nigeria. And pension and retirement benefits, would I pay tax on my pension, retirement benefit? No. Pension is exempted. Retirement benefit is exempted. Severance payment is exempted up to 50 million. Okay. There's no limit to pension exemption and retirement benefits. All of that is exempted without limit. We used to have the old law that placed a limit. My pension or retirement benefit. Okay. I think that was just a holdback. So
Okay.
So to try and conclude, so we have enough time for the questions, is just to be mindful of this, danger of the single story, where people will make it look like this form is about tax ID and bank account. Next day, they'll make it look like it's about capital gains on shares in the stock market, and so on and so forth. At a point, it was about VAT sharing formula. But this is a very comprehensive reform, more than 200 different changes, laws of over 400 pages. So the analogy I normally use is the proverbial blind man and the elephants. So these men can't see, but they know there's an object in front of them. So they move closer. Let's feel it to know, at least guess what it is. Depending on the part of the elephant that they touched, they concluded. One thought it was a rope. The other one says it's a tree. The other one says maybe a wall. One says it could be a fan. And one says it's a spear. And the one says it's even a snake. Now, it turns out none of them got it right because none of them felt the entire picture, the entire image. This is exactly the analogy for the tax reforms. If you focus on one area, you will conclude wrongly. Even the high net worth individuals that are required to pay a little bit more in personal income taxes, when they piece the lot together, they will now see so many exemptions, VAT exemption on real estate, lower CIT for their corporate businesses, input credit by the time you add all of it together, even the richest person will benefit under this new law. So some of the examples of what we have seen as single story is people saying tax rate in Nigeria are too high. Not true. You can see the major taxes, how Nigeria even compares with Kenya, Ghana, South Africa. Even the top rate of our tax for our high net worth individuals, this will be like a deal for many other countries. In South Africa, it's 45% top marginal rates. 35 in Ghana and Kenya. Nigeria is 25. Look at our, small business, look at airtime, look at VAT rates. Someone went to Accra, Ghana, from Nigeria and went to this restaurant. You can see this restaurant sell Nigerian food. And when they got their receipt, they saw how many taxes? 1 to like 6 taxes. So the person circulated it. I think this one went viral to say, we should not even complain about tax in Nigeria, that Ghana is far ahead of us. But of course, it's not just about the taxes you pay, it's also about the fiscal exchange. What do you get for the taxes you pay? This one was quite painful, the capital markets. At the end of October, that's beginning of November this year, the capital market had returned over 45% year to date in Naira terms. In dollar terms, over 50% year to date return. One of the best performing markets in the world. But no market gains every day. Some people just hate the idea of a tax reform. They didn't even want to understand it. When the market was, there was either profit taking or some correction, they said it's capital gain tax. Zero evidence. They just needed to say it. And they repeated it for 4 days. By the 5th day, it was 10 p.m. news on channels. It was on the primetime news on Arise. They had some Twitter space that says bloodbath, right? They had repeated it so well, by weekend, stockbrokers were calling their investor. Everybody is selling, won't you sell? One of our members said he got a call from his stockbroker. So, and then came this Black Tuesday, 11th November 2025. The market lost 4.64 trillion naira in one day. Largest plunge in 15 years, worth more than $3 billion or 5.1% of market cap. And what happened? We took the data from the market. It turns out that day, there were 20,173 deals valued at 23.5 billion naira. Average transaction, just a little over 1 million. Now, why are people who are selling 1 million naira rushing to the market to avoid, in quotes, a new tax that exempts 150 million from tax? So what I say is, it wasn't capital gains tax until they said it was. And the market is very vulnerable and susceptible to misinformation. In the long run, the capital market is right. In the short run, it's open to manipulation. And my view here is that if anybody misinformed without providing evidence, and they did that out of ignorance, it's negligence. If they did that intentionally, it's economic sabotage. So we have to put out a lot of information. The market bounced back the following day, the day after, and now nobody is blaming capital gains tax for it, because actually what we have done is to implement a lot of reforms that people have been hoping we implement for the capital market for decades, including exemption of withholding tax on bonus shares, exemption of stamp duties on transfer of shares, lower rate for companies listed and the other companies in the Nigerian economy. So many other exemptions and reforms have been introduced into the capital market that should create excitement. The size of our capital market is about $60 billion. And according to some data, that's about the size of virtual currency assets, crypto, stable coin. I saw a global report now that ranks Nigeria number 2 for adoption of virtual currency. And they said Nigeria was doing it out of necessity. The reality is the bulk of the people who are doing these virtual assets are our young people. They are investing $100, $120. They don't have a lot of money to invest. Our capital market has performed better than virtual currency, and our capital market is exempt for these people. But nobody is telling them that they would have made more money coming to the capital market. What they hear us say is 30% tax. The average age of investors in the Nigerian capital market is over 50 years. So why don't we use this as an opportunity to attract our younger people into the capital market, away from this virtual currency that is putting pressure on the Naira and is also taxable, and the returns are less, into the capital market where they make more money, tax exempt, and it strengthens the Naira. The other one is this personal income tax. I already explained it. So what we did was to build a calculator. So the QR code you see to the right of the screen is the personal income tax calculator. I decided to do a sample calculation of some income levels. So that's what you see on the table. You see even somebody that earns 18 million naira a year, that's 1.5 million a month, will see a drop in their taxes, and therefore take-home pay will be enhanced. So if anybody is interested, just for the fun of it, you can just get this calculator, put any salary number on it, and then it will do the calculation for you in less than 1 minute. We also think that this tax calculator will help small businesses who can hire accountants. They can just use the calculator and it will be good for their compliance level. Then there's also this fake news. We had a session for journalists, and then, everybody said Tinubu and tax, they want to kill us with tax. And then I had a simple question for them. Tell me one tax that this president had introduced on the masses, and I'll give you 100,000 naira. That was what I promised them. And then the room was silent. They didn't have an answer to it. And then I said, well, here's the email. If you find the answer, send me an email. I'm still expecting the first email. So for some reason, this is the president that has suspended, repealed, or reversed the most taxes in Nigeria's history. He's also the one that has the wrong perception of he wants to tax us to death, right? So some example here I can give you. By the way, the first executive orders that this president signed, and it was on the 6th of July 2023, he signed 4 executive orders. Those executive orders were suspending taxes. And you can Google it because at that time, I think the level of misinformation about tax was not as much as this. So you still find it on the internet. So this president repealed the 5% excise tax on airtime and data, suspended the cybersecurity levy that was introduced by the previous administration, suspended the carbon tax. There was a carbon tax introduced on single-use plastic. All these are nylon bags here and there. Was suspended. Excise tax was introduced on imported vehicles, 2000 cc and above, was suspended. Duties, import duties on food item, agri products, and pharmaceutical was waived. Import levy of 4% by custom was also suspended. Financial Reporting Council of Nigeria was charging private companies amounts without limits. You know, one company told me that they paid over 1 billion naira. So government, has now capped it at 25 million naira. No company will have to pay more than 25 million naira for financial reporting because FRCN is not supposed to be generating revenue. It's supposed to just be running its operation. Then expatriate employment levy was approved in the previous government, was activated under this government. Private sector said it didn't make sense, and that tax was also reversed. So you can see a lot of taxes being reversed, reduced, or suspended. In a nutshell, these reforms will move our country forward. And the best way to predict the future is to create it, according to Abraham Lincoln. So what do we need to do? Seek better understanding so that our engagement is constructive. If we are not informed, we'll make the wrong decision, would put the unnecessary pressure, we'll even fight reform that is meant to help us. And then we need to manage the transition. Areas where, because nobody's saying these laws are perfect, they're not meant to be perfect. But by engaging with stakeholders and getting feedback, we know the areas where we can do something about with implementation, areas to fine-tune, and areas to even pencil down for future amendments, which can be as recent as even next year. So this is the spirit of moving forward together. And of course, we need to position ourselves quite well, understanding the reforms and how they benefit you allows you to position yourself. Young people now can position themselves for this remote work. You can find people in the capital market positioning themselves to attract investment from the younger population into the market and make money in the process. I was on the plane also from Lagos to Abuja, and I was sitting next to a man that I had not met before. But of course, he knew me from all these my public events. And he said, "Oh, you are the tax man, thank you for what you do." And then I got curious as to why he was, so excited about the tax reform. He said, well, that he owns a gaming, gambling, and betting company, and that he's happy that our tax reform would enhance the disposable income of the average Nigerian from January, and that he knows that when they have extra money, they will gamble more. For a moment, I was shocked, like this is not the reason why we're doing all of that. And then I said to myself, why am I even angry with this man? He's just positioning himself, right? He's positioning himself to take part of that extra disposable income. And then you find some other people that could do the same thing. They're complaining about misinformation that they got from content creators. So on this slide, you see loads of information. To the left, the QR code is the link to download copies of the new tax laws, official Gazette copies. They have been uploaded to the website in searchable PDF format, which means you can search it. If you just open any of it and you just want to know something about, taxation of lease rental or whatever it is. And the AI will even come and help you summarize what is it that you want. So there's no excuse not to be informed about these reforms. We have email accounts where you can send us an email. We have a WhatsApp number. We have a WhatsApp channel. We are on all the major social media accounts, LinkedIn, X, formerly Twitter, Instagram, Facebook. We have a dedicated YouTube channel where you can see our explainer videos. And we also open TikTok so we don't leave our teenagers behind. So this is the story I have for you. Thank you very much for the opportunity. Let me see some of the questions I can quickly go through. Some of them I've addressed already. These are the questions you sent. Do individuals require TIN to continue running their bank accounts? No. If you are an individual and your bank account is not for business, you don't need a TIN at all. But if you're an individual and you use your individual account for doing business, then you need to get your TIN. Then how about an estate account for a deceased? Somebody passed on, but they have this estate account. If the estate is going to be generating income, then you need a TIN. If the estate is not generating income, you don't need a TIN. Number 2, is government introducing new taxes? No, I already addressed that. Government is removing old taxes and harmonizing the remaining ones. By the way, we've sent amendment to the National Assembly, proposals to amend the Constitution, because some of the nuisance taxes, they are contained in the Constitution and they cannot be overridden by the new tax law. So as we're working on the new tax law, we're drafting alteration to the Constitution. We've also drafted tax harmonization law for subnational to enact, because Supreme Court says you cannot control them from the center on what taxes they can collect and which they cannot collect. So we have 3 measures: the new tax law, tax harmonization law for subnational, and then alteration of the Constitution, and all of these is work in progress. Will my bank account be debited from January 2026? No, I already explained that. Will small businesses suffer more? No, this reform is for small businesses. We used data and concluded that the bottom 97% of informal sector have no capacity to pay tax and they should just be exempted. So this whole narrative of informal sector is where your money is not supported by data. One of the principles that we worked with was, we're told efficiency of collection means don't spend $1 to collect less than $1, right? So which means if I spend $1 to collect $2 on paper, I've done the right thing. We went beyond that. We said, beyond the efficiency of collection, you need to think about the opportunity cost of the tax to the payer. I have spent $1 to collect $2. On paper, looks good. Until you ask the person, what were you going to spend the $2 for? It was the $2 to buy yam. It was the $2 to buy paracetamol. It was the $2 to buy pencil and eraser for the kids. You took that away from them. That cannot be right, because on a normal day, if they are unable to meet their basic need, government should even credit their account. It's bad enough we can't credit their account. Why collect taxes from them? So that data was what we used to come up with our conclusion. We looked at the living standard, we looked at the employment data, average size of household. We looked at a lot of data and concluded that the bottom 97% of the informal sector have no capacity to pay tax and they should be legally exempted. The top 3% that can pay should pay something that is not too burdensome on them, because our objective is actually for them to grow. Let the nano become micro, micro becomes small, small becomes medium, medium becomes large. Large companies should become multinational. That's the aspiration for our country. Given the need to encourage more investment, that's number 5. With capital gains tax of 30% on the capital market, not discourage investment. I've already explained that. Confirm the exemption threshold, 150 million, not more than 10 million gain for an individual in 1 year. If you exceed that, then you can get an exemption if you reinvest within the same year of assessment. In other words, you can exit the market in January, February, go and do some fixed income, and then come back before December, and you're good to go. All the gains you've made, even if it's on 10 billion naira, is exempted. And then pension funds are exempted, no conditions attached. Real estate investment trusts also unconditionally exempted, mutual funds. So a lot of exemption, honestly, to be honest, those that are paying these taxes, nobody actually will pay the tax if they don't want to pay. Let me put it that way. Number 6, since only 800,000 naira per annum income is exempted, does it mean even minimum wage earners will pay tax? I've explained that they will not pay tax. 7, are gifts and remittances subject to tax? No. Already I've explained that. Will Nigerians in the diaspora also be taxed in Nigeria? No, they will not be taxed. 9, is pension and retirement benefit taxable? No, it's not. How about returns on my investment like mutual funds? So if you earn returns on your investment by way of interest on government bond, fixed income securities, if there's withholding tax, the withholding tax would already be deducted before you are paid, and that withholding tax is your final tax. You don't pay any for that tax. On mutual fund, you don't pay tax because the income that the mutual fund earn are always either exempt or withholding tax is the final tax. So a mutual fund can earn dividend. They can earn interest on government bonds. So by the time they give you the returns from the mutual fund, you are good not to pay any other tax. Will the new tax law forgive non-compliant small businesses so they can start afresh from January 2026? Fantastic question. My committee had a retreat for last week. We finished on Sunday, and this was one of the things we worked on. So we actually have a draft already, although this is not official because it's still an internal document. So we're working on a voluntary disclosure program like a tax amnesty that just says if you're a small business, just show up. You don't need to even pay your past taxes because when small businesses and low-income earners don't pay tax, they haven't opened an account and kept the money there waiting for the taxman to come. They spend the money on survival and basic consumption. So if you ask them to bring the money by force, you actually not only are trying to do the impossible, you discourage them from even complying going forward. So our view is that these small companies should just be forgiven 100%. Let them just come and register. If they're exempted, they don't pay tax going forward. If they're above exemption threshold, they pay their taxes going forward. Is the perception of migrating from an enterprise to limited liability company advisable? So we received this question a lot. You say, should I register a company as limited? Should I continue as a business name? What I'll say is that it depends on what you do and who you are. Generally, under this new tax law, if you set up a limited liability company, your taxes will drop to 0% income tax. Whereas if you operate as an enterprise or business name, you will pay tax as an individual on your business income. 100 million naira annual turnover will qualify you for 0% corporate tax if you have limited liability company. But other than that, there's no difference. Whether you're an enterprise or sole proprietor with no name, or you are a company, every small company is entitled to exemption from VAT. You don't charge VAT, no withholding tax on your income. You don't need to charge withholding tax when you invoice or you are paying your vendors. And your employees, usually they will earn like 100K or less. They also don't need to pay tax. So the bulk of the exemptions and incentive for small businesses apply to everyone, whether you are limited or not. The only distinction is income tax, where limited gets 0% and enterprises will have to pay tax based on their income tax band as individuals. What are the areas we can get tax relief? Plenty. VAT input credit, lower withholding tax rate or exemption, depending on what you do. I've also explained to you the economic development incentive. Excuse me. For priority sector, we also have deductions for wage that if you hire more people, right, you get a relief for the salaries you pay them. If you pay them transport subsidy, those reliefs are plenty. Number 13, how does the Office of the Tax Ombud work? What are the benefits? I also explained that earlier on. The Ombud is your tax friend to make sure that your taxpayer rights are respected. and to take up issues on your behalf to seek resolution without any charge whatsoever to you. Number 14, how are clubs, faith-based organizations, and other NGOs affected? So if you have a club or a faith-based organization, a church or a mosque or any other NGO, the new tax law is very clear. If your activity is not for profit, you don't pay tax. But if you start doing business with your NGO, you start paying taxes. So what that means is a church, now has a property they let out and they're collecting rent. They'll pay tax on it. And again, this is not even new. There used to be there was a Supreme Court judgment, I think in the 90s. It was Methodist Church, and they had this property in Marina. They let out, they collected rent, they thought it was exempt. Taxman said no. They went all the way to Supreme Court, and Supreme Court said they should pay tax on it, that is commercial activity. So in a nutshell, a club, faith-based organization, or any other NGO is exempted from paying tax, provided the activity is not for profit. Once they start doing commercial activities, they will pay tax like anyone else. How will CGT be charged on a property being sold, which was built 50 years ago? You have a property, you have land, how do you deal with this? So this is one that is a bit tricky. So under the new tax law, your capital gains tax rate is no longer a flat rate of 10% that it used to be. It is now a function of who you are. If your income band is 0%, your CGT is 0%. If your income band is 2%, your income band is 7%, you pay 7%. Whatever your income band is, up to a marginal of 25% if you're a multi-billionaire. But because it's going to be difficult, because capital gains tax is transactional. When you sell the property, at that point, you need to go and do transfer with the, government office, land, and that. Whereas your returns for income tax is filed at the end of the year, actually the March of the following year. So what we are now working on is a presumptive tax system that says if you earn capital gains on property, why don't you just pay a presumptive rate of like 2%? So it's 2% we actually have there now. Just pay 2%, which is what many of the states are collecting today. I think Lagos State collect 2%. Kano, we spoke to some of the states, and they tend to collect around that amount. So we're pretty much just retaining, what we used to have at 2%. But this regulation I'm telling you about hasn't been finalized as of yet. Once it's ready, we'll share that widely. 16, is fiscal federalism not impacted with the manner of tax collection vis-a-vis federal, state, local government? Who is collecting what taxes, LRS or FRS? Excellent question. So every level of government retain their fiscal federalism authority to collect taxes. Nobody is harmonizing, collecting. Federal will not collect taxes for state, state will not collect for federal unless they agree between themselves. There's a provision that allows them to say, help me collect my tax, and that's voluntary. Otherwise, everybody collects their taxes. As an individual, if you are resident in Lagos, your personal income tax goes to LRS, not FRS. Okay? If you are in the FCT, your personal tax goes to FCT IRS. If you're a company, your company income tax goes to FRS, which will now be known as NRS, Nigeria Revenue Service. If you have VAT is remitted to NRS, and then is shared by all levels of government. 17, how is an average individual expected to calculate their taxes and file returns? Remember the tax calculator I showed you earlier on? That's the best way for an average person to calculate their taxes. How do you file the returns? Depending on the state where you are resident, if you are resident in Ekiti State, just look for Ekiti Internal Revenue Service websites. All of them now have websites. We're also helping them to upgrade the standard of those websites so they can interact easily with taxpayers effortlessly. So if you live in, a state like Lagos, you are in the FCT, you are in Kaduna, you are in Ondo State, you are in Enugu, many states, quite easy. You can do all this filing online easily. We're also working on simplifying this even further. It should be as easy as trying to buy airtime. How do we address accountability for taxpayers' money? This is a billion-dollar question. Yeah, we're all concerned, including myself, about how our money is being spent. When my committee was set up, and that's still the case today, it was set up as a fiscal and tax reform committee, even though people know us about the tax. The tax reform was actually less than 20% of our work. In fact, where we started with was around, government spending, priority of spending, quality of spending, government borrowing, efficiency of spending, as well as coordination of policies, all those things. We even have a national fiscal framework that we had developed, trying to guide government as to how to spend money. We also have sent a proposal to the National Assembly to amend the Constitution to make accountability a requirement for governance, as well as to restructure our budgets. Nigerians, are not happy with cost of government. They'll say there's so much going into overhead. So in our proposal to the National Assembly, there will be a cap on how much can go into overhead. There will be an idea of how much must go into infrastructure, human capital development, personnel costs, and so on and so forth. If we succeed with these amendments, we cannot go to sleep. Local government got their financial autonomy, but I challenge anybody on this call, we have over 700 people, to tell me if you have seen the audited accounts, annual budgets, and development plan of any local government online. 774 of them, at least I haven't seen, and I've tried. Whereas in South Africa, if you go to, there's a website called Municipal Money, you find every local government is required by law to publish their development plan, which is something they get from their role in the constitution. From there, they do annual budgets. From the annual budget, they do annual audited financial statements, and they publish all of that, right? So you don't just come and fix 1 kilometer road substandard and you say it's dividend of democracy. What development plan means is that you say in my local government, I have 15,000 households. 11,000 of them have no access to water. I have 10,000 kilometers of road. 8,000 is not paved. Just basic data for governance so that we can know that when we find 1 naira, this is what to prioritize. I have 80 primary schools. 60 of them have no teachers, and they have no textbooks, and they have no tables, no roof. We don't have that discipline yet. And that's what accountability means across all levels of government. So this is also one area where we are appealing to our people to support, because someone like me now, I can't go on TV and be calling out government to say you're not accountable. They just look at me and I'll get the applause from the people, but none of my reform will pass. So wisdom also requires that these things, you get the policymakers and political leaders to own it so they can run with it like it's their own idea. And that's we really don't care about who gets the credit for it. We just want these things to be done. So how will the new tax laws affect personal savings and investment? Number 19. Personal savings, investment, returns on your investment, we haven't tampered with that. Though one misunderstanding that happened was that there used to be an exemption order on fixed income securities like, treasury bills, like, commercial papers, corporate bonds. And that order was issued by the former president, Jonathan, in 2011 for 10 years. It expired end of 2021. From 1st of January 2022, all these securities, apart from federal government bond, became liable to withholding tax. But compliance level was very low until FRS wrote a public circular recently and said, by the way, people should remember that there's withholding tax on fixed income security. Everybody just blame it on this new reform because anything that happens about the tax system now, it has to be this reform. That has created a lot of negativity around the reform, but it wasn't our reform that brought that, into bear. What we have done in our reform is that we used to have this exemption on income earned on domiciliary accounts. It was like Nigeria was rewarding people for saving in dollars, which, to be honest, doesn't seem to make a lot of sense because you are incentivizing people against your own currency. So we've removed that from the new law. So whatever taxes you pay on your interest, you will pay on your interest on your DOM account as well. We'd rather that you even save in Naira to strengthen the Naira. And the last one is my corporate bank accounts are used for several of my companies. So this person has like 3 or 4 companies. If one company has no money to pay salary, they move from one company to another just to pay salary. They want to buy something, the money is not enough, which is the normal thing most people would do. How will this new law impact this practice? Now, I would really advise that if you have to move money around, just get your accountant to record it. So when you move money from company A that belongs to company A to pay the salary of company B, you record it as a receivable between them. So if you do the accounting well, you are perfectly all right. There's no problem at all. If you don't do the accounting well, all that you need to do is just to explain that these are not personal. So if you have expenses of companies and you're moving them around, it really doesn't make so much difference to the taxman, because what the taxman is interested in is that you are not using the company's money to take care of your personal expenses without reporting it as your income. Normally, there's this principle of, entity concept in accounting that says you shouldn't take your personal affairs and put it on your company. If you want to spend the company money, pay yourself a salary or take dividend. So that is what, these are the questions I was able to capture. So thank you very much, sir. I think we probably have time for a few more questions.
We do indeed. Thank you very much, Taiwo. And that was the idea behind having the question. All I had in the presentation was working towards a better society. That's all I got. And I think that's what many people on the platform are hoping for. But in any change scenario, there's always fear, right? Even if where we're going is better, if we can be afraid of dying, and yet every Sunday, every Friday, all we are told is how beautiful heaven is. I mean, but we don't want to run to heaven, and we won't run to heaven. I have a couple of people on the platform that may want to add their voices, just about 3 of them. I have Folusha Phillips, if he's still on the platform. I have Yewande Zacchaeus, if she's still on the platform. And I have Amina Yagbola, if she's still on the platform. Just in case there are some gaps in terms of, or some questions have not been appropriately asked. Thereafter, I will present some of the questions that came as you were speaking. So maybe we can start with Folusha Phillips. Please unmute yourself, and if you can't, I will unmute you from here if I need to.
Okay. Thank you very much, Fola, for putting this together. And Taiwo, as usual, I think I must have heard you, I don't know how many times, to the extent that I have now become one of your great advocates. And it's so funny, the last set of questions that you just ran through, I was answering them and I was giving myself marks for giving the correct answer, because they match your own answer as well. But it is fair to say that this is all part of governance. It's all part of bringing sanity to our system. It's all part of saying that, look, we just can't do things willy-nilly, and there's got to be order in our lives, and allow us to have and take on the responsibility of playing our part in society. We cannot, on one hand, complain about the quality standard of services that we get when we're not actually contributing to it. But at the same time, it's nice to know that the call for us to make that contribution, it is seen to be fair. And really, honestly, and without being sort of patronizing, I think these tax reforms they make a lot of sense. And where people have to complain, it will probably come about when we get going. But certainly, each time people have raised issues, you find out that they really don't have anything to say that is negative to
Please
this.
remain muted, please. We can, so that other people can.
Tayo.
Please
Anyway,
mute yourself, Mr. Taiwo.
Yeah. So mine is just to commend you. I honestly haven't got anything to add because, like I said, I've heard you several times. We've talked about it,
Okay.
even within organizations we've done.
Thank
So
you.
well done.
Thank
Well
you.
done.
Thank you,
Thank you.
Folusha.
Thank you very much, sir.
Yewande, Zacchaeus, Mrs.
Yes, sir. Just to say thank you as well, and to say that I have learned a lot. And yes, it's not as terrifying as we all have believed it will be. So thank you. Thank you for all the clarifications.
Mrs. Oyabola. Thank you, Mrs. Zacchaeus.
Thank you very much for the opportunity to say something on this fantastic platform. I think the convener has said it all. It's about building a good society. And thank you, Mr. Oyedele, for all the excellent work and these reforms. Very bold, very courageous. And I liked the particular picture on one of the slides where you put the social contract at the very top. So it's not just about the reforms, it's also about how we as Nigerian citizens respond to it. And thank you for all the explanations and the clarifications and your continued effort to consult, and leave the door open, for queries. And you've done everything humanly possible. I think the websites are there, the QR codes are there. So, we have to do our part as citizens. And I think you also addressed very nicely the issue of accountability. The more there's transparency in the whole tax regime, we generate more income. That gives us, as part of the social contract, as citizens of Nigeria, the platform to ask questions about how the revenues are being spent, and it speaks to governance. Thank you very much indeed. Thank you, Mr. Adeola, for organizing this for us.
Thank you. Taiwo, the questions that we got today, and when we get these questions, in whatever form they come, we owe a duty to those who have made themselves available on the platform to present to the person who is giving the lecture. My question, this is BSG Professional Service. Okay. My question is about the illegality of VAT. VAT as sales tax is on the concurrent list. I understand the issues with political correctness, but why was it impossible for your committee to stand with the Constitution and revert VAT to states? Okay, that is a question. The same BSG, I'll ask you 5 questions at a time.
Okay.
Same BSG says, why small businesses, I'm not editing, why are small businesses in the formal sector to enjoy 50 million non-taxation, while an individual does not have this exception? Where is the fundamental principle of equality here? I'm just using the language unedited. The number 3, Oladele Aziz. Minimum wage is 70,000 per month for grade level 1, step 1, in service of the federal and state government, totaling 840,000 per annum. But the federal and some state governments have outsourced grade levels 1 to 3 to contractors who engage cleaners, gardeners, and others. It thus means that the real lower level staff in government, MDAs, are from grade level 4, not level 1. Can we say the much hype tax-free annual emolument of 800,000 is beneficial to any low-level government workers? Oladele Aziz. Number 4, does this attract MCP credit? I think you may disregard that because we are not a degree or professional qualification awarding institution. We are just engaging as members of a common society. Then BSG came again. This is his 3rd question. What is the status of decided cases that the taxman can go back to more than 6 years in cases of probable cases of fraud, just as he has written it? Those are 5 question. You can disregard the MCP credit. And
All right, sir. Okay, great questions. I like the questions a lot. The first one on the legality of VAT from the Constitution. So the context is that we used to have sales tax in Nigeria in the 80s, and state collected it, but they were unsuccessful with it. Then in 1993, VAT was introduced with the understanding that it will be collected centrally and shared to states. By the time we got into this current democratic dispensation in 1999, they copied 1979 Constitution. In 79, there wasn't VAT. VAT was introduced in 1993. They copied the Constitution in 1999 and forgot to put VAT. So VAT is not in the Constitution at all. It's not like it's on concurrent list. It's not in the Constitution at all. I'm not a lawyer. Lawyers will say that's a residual matter if you don't put it in the Constitution. And we can even argue that it's supposed to be local government collecting it. But the reality is that if you ask state to collect VAT today, the state will lose more than half of the revenue they are getting from VAT, all the states. The reason is that the federal government actually would then be entitled to VAT from FCT. VAT from FCT alone is about 14% of all VAT collected. VAT from international transaction when you are doing, at the border, and international services from Google, all these apps that we buy is half of the VAT we collect. That will now go to the federal government. So actually, if you say, let's say feedback.
can somebody move one of his equipment away from the other one? That's when we get, yeah, thank you.
Okay. So if you say, let's just follow, this is residual matter, let local government collect it, the state and local government will lose significant amounts of revenue. So what have we done? We said, since the understanding was that let this be collected centrally, it still belongs to the state. So like ownership is more important than who is collecting it. And then in parallel, we had sent a proposal to the National Assembly to amend the Constitution and include VAT on the exclusive list. Not that federal government will collect it and keep it, but that the federal government will collect it and share it to the state. That's why we also reduce the percentage federal government used to share from 15% under this new law to 10%. So the biggest beneficiaries of this VAT reform are the states. So that is, I saw somebody was already saying they will go to court and say VAT is unconstitutional. I said, well, let's see how it plays out. The second one, why are small businesses enjoying exemption of 50 million, 100 million, but individuals are not enjoying that? I think the explanation to this is quite simple. When I run a business as an individual, small business, and my annual turnover is 50 million, that's not money for me to spend. That's my turnover. I need to take care of cost of sales, overhead. I need to buy diesel. I need to pay staff salary. I need to deal with regulator. There's so much risk and pain that you go through running that 50 million naira business. You'll be lucky at the end of the year to have 5 million you can even call your own. So you don't want to build a society where you are rewarding people being employees more than people creating jobs, because it's those people that are creating jobs that make the economy grow. So it's, on one hand, it's intentional, but also so bear in mind that that 50 million or 100 million is not the money belonging to the business owner. It is their gross, for which they have to settle so many people, including suppliers and staff, before they are left with something small at the end of the day. Minimum wage is 70K, that's 840 per annum, and then all these things about some levels are outsourced. But the question is this really beneficial to low-level employees? The answer is yes. And the reason is simple. These low-income earners are paying taxes today. Somebody even asked me and said, they can't trust government. Government will always be wasteful. And I said, okay, well, let's even say that government will be wasteful and they will never be accountable. They are collecting 10,000 naira from me now. They are not accountable. Under the new law, they will collect 4,000. Why should I fight the 4,000? At least I'm better off by 6,000 that they no longer collect. So these low-level employees will benefit from the tax reform. Whether they outsource or hire directly, it doesn't matter. So long as they earn income and they are low-income earners, they'll be exempted from tax. The last one is decided cases, about taxman going back beyond 6 years. He will tell you there's fraud. This was one of the things we tackle in this new tax law. The existing law says the taxman can go back for as many years as they please if there is fraud, willful default, or neglect. Like how do you even determine that I defaulted willfully? How do you determine what is neglect or negligence? So in the new law, we've taken out all those subjective bases for going back indefinitely. In the new law, we have only one condition under which the taxman can open your tax case beyond 6 years, and that is deliberate misstatement. Deliberate misstatement. So which means they have to even prove it, right? So long as you are not deliberately forging documents and misstating your affairs, under the new law, the taxman can't go back beyond 6 years. That's the new statute of limitation. Thank you, sir. So I'm done with the questions.
Thank you. The next set, and I will let you go at the time we committed, but we will take every second of that time, as you can see. I invested in the shares of an unquoted company 10 years ago. I liquidated it with significant gains in February 2026. If I reinvest the proceeds in 2026, the same year I sold it, will I be exempt from capital gains tax? Unquoted company, liquidated in 2026 February, the proceeds, substantial gains, the proceeds reinvested in 2026. I thought that from this presentation, you have answered that question, but since I'm not the presenter, I will let you answer it. As a Nigerian company, number 2, I invested in the shares of a technology company registered in Delaware 5 years ago, in US dollars, of course. I sell the shares in March 2026. To compute the gains, can I recognize the devaluation in the value of the Naira? If I reinvest the money in quoted security in Nigeria, will I be exempt from capital gains? What I'm finding is that the thrust is this capital gains. And you're right, when you captured, we are psychologically anchored to capital gains now. So as much as we can, we need to go on explaining it. This is another example. If I reinvest money in a quoted Nigerian company, will I be exempt from capital gains? And number 3, if I sell my quoted shares as an individual or a company and reinvest in unquoted shares, will I be exempt from capital gains? So the 3 questions here are about capital gains, but bringing different scenarios. Number 4, beyond tax collection, how is government improving transparency on the use of tax revenues? You've covered that in terms of what I would like to add to that is that it's our country. There is this line drawn between them and us. If we seek knowledge, as we are doing tonight, and we understand things, we also have a duty to assist government to direct itself towards a judicious use of our resources. I'm not saying that it is easy, but the more that government finds that we have knowledge, we know. Nobody can pull any wool over our eyes. I think then let me then create a 5th one. Toyin Akinyede, Tosin Akinyede, how do you intend to treat withholding tax on cooperative society investment? Since FIRS has mandated banks and investment houses to remove withholding tax, as cooperative societies are not meant to pay any taxes. That is the 5th one. We'll let you handle that, and then we take the next 5.
Yes. Thank you, sir. So thank you for those who asked those questions. The first one is, I have shares of an unquoted company. I made gains, sell it in 2026, and then I reinvest it. Would I be exempted? The answer is yes. The exemption covers listed and unlisted equity. You can move between that as you please. And there are also some sectors that are permanently exempted, whether you even reinvest or not, under the Startup Act. particularly the tech companies, you get full exemption whether you move or not. The second scenario is, I invest in a tech company share in Delaware. What if I sell it in 2026? I make gains. Can I recognize my devaluation losses in Naira? Of course, yes, because we're now treating capital gains as if it's income tax. We merge it together, literally. So if you have any losses in Naira, you are free to deduct those losses. The second one is I sell unquoted and I invest in quoted. I could also sell quoted and invest in unquoted. Do I get the exemption? The answer is yes. How is government improving transparency? I agree with you, sir, especially the points you made around we need to have knowledge and then we ask questions. If we're asking questions without knowledge, the politicians are just laughing because they know we're just all over the place. When you have the right knowledge and you ask questions, it's so powerful. And I feel like transparency and accountability is a demand and supply thing. When the people demand for accountability, politicians supply it. If what we are demanding for is it my tribe, is it my religion, then they have a field day at our expense. The last one is withholding tax on cooperative investment. The person who has the question is right. Cooperative societies are exempted from tax in the law, even in the new law, even in the old one. So if anybody is asking you to pay withholding tax, I think it's just something you need to take up with them. That's not the law, just them trying to abuse their position. The advantage you have is that from next year, you can ask the ombudsman to deal with that. It's a procedural matter, and you should not have to spend your time trying to tell the taxman what they should already know.
Thank you. Before I go to the next set of questions, there is an insistence on the part of Prince Aderemi Adekile, SAN, FCTI, to say something, but I will just allow him 2 minutes. I hope he will be guided by that. Prince Aderemi, please unmute yourself.
Thank you very much, sir. First, I want to commend Mr. Thank you very much, sir. I want to commend the team and the federal government for this very important step in reforming the tax laws. I note from the presentation of Mr. Taiwo that he already alluded to some amendment, to some proposals for amendment at the National Assembly. May I just also request that such amendment actually should also take into consideration, the need to look closely at some of the sections of these 4 new laws. I have posted 3 questions on the platform, but for ease of reference, I will just also speak to those questions, right?
No, your time is up. I will send all your 3 questions. Prince, let me send your 3 questions to Taiwo.
Yes, sir.
We don't make these promises in vain. You can ask him. Up to 6 o'clock today, I will still forwarding him questions. All the questions of the platform have been, and I intend to pass to. Please.
Fox was accused of doing the wrong things. He was accused of fraud and corruption.
Okay. All the questions will be forwarded to them, not just because of us on the platform, but because of the work that they are doing. And it's out of this question that they will mine some answers. We won't be able to take the length of time that you have because we still have some questions that. Please, mute yourselves.
I truly are.
Thank you. Yes, sir. Okay. I hope Taiwo can hear me. Hello?
Yes, I can hear you. I was muted before. Yes, I can hear
you. Kelechi is asking.
Jointly with Mr. Akola Awoden earlier on, Mr. Akola Awoden SAN, FCTI, we have also sent a short memorandum to Mr. Oyedele, while preparing for this meeting.
Okay.
It's my hope that the memorandum also will get the requisite attention and all the issues, will be I appreciate. Thank you very much, sir.
Thank you. If our little questions here are getting attention, I believe that something from a tax expert, a legal luminary, as we say in Nigeria, I believe that Taiwo will respond to it and his committee. Will the MOU with France on taxation be made public? Number one. Number two, by Rabbi Isma. Aren't bonus shares basically stock splits? Why would they be taxed? Number three, by Dr. Deji West. Please, can we have the QR code for the payee calculator again? I think that's easy. If you can just leave it on the screen.
Yes.
Then lastly, the fifth one, can the operation stroke mechanism of the rent relief be explained? Some of these are one-liner answers. Let me just increase it to, let me add two more. Babalola Lekon, is the earning of a worker under contract employment taxable? Then the last one in this category, Erdogan Henry. When will the free training of tax agents start? And when should we expect details for training? That's the next batch. We have 6 minutes left. We'll see what we can do with it.
All right, sir. Let me quickly put up the QR code for the calculator while I answer the question. Okay. I'll do it after answering because it will block. I wrote the questions on the screen. Let me answer the question and then I'll put it up. Sure. So the comment about as we are planning to do amendments, we should bear in mind some defects in the new law. Obviously, even the definition of small business, for example, there's a conflict in the law. So we are noting those things for corrections at the earliest opportunity. The MOU with France, will it be made public? That's not within my mandate. It's an MOU between the FRS and the Revenue Authority in France, but I can tell you that I know about it. In fact, it was something we initiated. As we're working on this reform, what you normally do in government is you go and do understudy of other countries, and then you travel to all manner of places. We decided that we're not going to travel, that we'll just do online meetings to learn from those other people. So we went to so many countries in Africa, outside of Africa, Europe. We went to more than 20 countries that we wanted to learn from. For example,
online,
yes, online. So
because
we were going to
say that before you are quoted tomorrow.
Yes, as traveling abroad. All of it was online. So we went to the ambassadors. Like we went to the High Commissioner for the UK to say, can you link us up with HMRC? We went to the French ambassador, can you link us up with DGFIP? So we did like this meeting now. We spent time online, and then those we could learn from depending on areas where they are doing better than us. We said they will help us here, help us there. And those countries have been helping us, from Rwanda to Kenya to Ghana to South Africa to the UK. It was France that was a bit more meticulous, They then sent people to us in Nigeria on delegation. We spent like 1 week. They said, what you asked us to do, clarify, and then they documented it and said, let's sign so that there's clarity. So this was really just about training, experience sharing. By the way, France is the most efficient and effective in collecting taxes in the world. So there's a lot you can learn from them. All this harmonization we're trying to do, they do harmonization with their eyes closed. So nobody is giving them access to data. Nigeria, by the way, is a signatory to International Exchange of Information on Tax Matters. And there are protocols that before we were even accredited as eligible, it was years. I think it was just about 2 years ago that we passed it. In our new law, there are provisions saying every data about the taxpayer is confidential and secret. If you expose the data, the officer himself will be in trouble, including penalty and possible jail term. In other words, what I'm saying to you is that we need everybody to be on mute. So the point is, in the interest of our time, nobody is sharing data with this MOU.
Taiwo, you need to unmute yourself now because I've just muted all.
Okay, thank you, sir.
Okay, yeah.
So I can give the assurance that this has nothing to do with taxpayers' data, but it's also not my call whether it will be made public. The other question is, bonus shares are really just stock splits. Why are we even talking about tax? 100% I agree with the person that asked the question. So you're just splitting stock. It means nothing from an accounting, even from the stock market. If I give you 1-for-1, they will mark the market value down by 50%. But our tax system did not recognize that. They said it was like a bonus or dividend, and you were supposed to do withholding tax on it. That problem has now been taken away in our new law. So our new law says no tax on it. Old law says pay tax on it. The QR code for PIT calculation, I'll put that up in a moment. Then rent relief, how does it work? So the way the rent relief is supposed to work is the payer of the rent will provide the evidence that they pay the rent, and then they get the relief up to 20% of the amount they paid, not more than 500,000 naira. So the details as to what level of evidence should be provided is now being worked out by the Joint Revenue Board, and we are supporting them in that process. The last one is, if I'm a contract staff and I earn a salary, is it taxable? The answer is yes. The law does not distinguish between whether you are contract, temporary, or permanent. It just says, did you earn an income? Yes. Are you above the threshold for exemption? Yes, you pay the tax. Otherwise, you easily find CEOs who be contract staff. So you always want to make sure that when you enact a law, you don't allow easy loopholes.
Ladies and gentlemen, it's 9:59. I think it would be foolhardy on my part to start reading more questions, to take me to 10 o'clock, and Taiwo will have a right to decline answering those questions because it's a promise. I want to thank you all, and I want to let Taiwo know how important his work is or has been. We had over 700 people on this platform on a Tuesday between 8 and 10. That is in terms of signing.
It's 22 hours.
Some systems are being received by 5-6 people listening to you. And that shows that there's so much interest, right? Don't let us just see the fear. Let us see the interest. And for people, since I released when I sent this thing out, it was a limited number of people. And then I realized that they took liberty to just be sending it to everybody. So my email address is exposed. If you still have questions that haven't been answered or I wasn't able to get to your questions, I am willing to receive them, because all I do is as soon as I receive them, I just dump them on the reformer. And he hasn't said to me, don't send them anymore, or you have sent too many. On your behalf, I want to thank Taiwo Oyedele. The journey the path you are on is rare. Not many people will have the opportunity to carry out reforms for their country in their lifetime. It's an opportunity that you have, and as much as we can support, we will support. We don't have to be in government, or we don't have to carry public titles to do so, as you have seen. We wish you well. And if there are other things you also need from those who are on the platform tonight, I will be that man in the middle if you need me, until I also say, don't come here again, but not yet. Thank you very much. I wish you a successful reform. And I know what that means as somebody who has been involved with a reform myself. I wish you all the best, and I wish our country well. We'll get there. Thank you. Thank you, gentlemen.
Thank you very much.
Thank you very much, sir. Thank you very much.
Thank you very much. Well appreciated. God bless you.
Thank you, Mr.
Thank you very
Thank
much.
you very much.
Thank you.
Thank you,
Taiwo.
Thank you.
Very instructive.
Thank you so much.
Very much. Tax QR code. QR code.
Thank you, Taiwo.
You didn't put the QR code.
Yes, I'm putting it
QR
now.
code.
Apologies.
QR code.
It's there. I will leave it for 5 minutes so that everybody can have their
Yes.
Train the trainer program.
Very well done, Mr.
Yes,
Taiwo.
Train the
Thank you very
Trainer
much,
has
sir.
started today, so just watch out for the email.
Okay, thank you so much.
Now go there.
Very helpful. Very helpful.
Well, Taiwo, I'm not the one holding you now.
I know, sir.
Okay, I've discharged on my promise.
The QR code,
I
sir.
will be here.
The
Yeah,
QR
the QR
code.
code is on the screen, sir.
Yes.
Someone
Yes.
is asking. That's it.
Yes. It's
Well
on the
done, Fola.
screen.
Yeah,
Just use your phone.
just snap it.
Your phone, snap it, and then
Mungode.
you're welcome. You're welcome.
Yeah,
We
thank
also
you very
need
much,
the
sir.
slides.
Thank you.
We need the
Mr.
slides, please.
Adeola. Thank you, Taiwo.
Okay. We'll send this slide to Mr. Fola Adeola.
Yes, we have dropped our emails, please. Thank you very much.
All right.
Yes.
Taiwo, can you come back again? We are raising our
Holiday, thank you very much.
minutes. Can you come back again for another 2
Oliver
hours?
Twist.
On this same matter,
I will consider that.
Yes. Mr. President,
I have scanned this
we'd
code.
love to be
now.
asked. They'd love to be asked.
How do I save it? I want to have
Oliver Twist.
don't send me your questions or send them to Taiwo directly.
I think this will be taken to all the states.
Okay, I think we've all taken the
to go around and talk
The
about
QR
it
code.
all over the